Well, folks, here today I sold out of a huge position. Literally, as of last week, this was my number one biggest dividend stock I held in my dividend portfolio. I just sold every single share here today. And I bought 6 stocks with that money. I'm going to share with you what stock it was that I sold, why I did it, and obviously the stocks I bought here today, which are 6 of them, okay? Now, really, really tough decision, and it came out of nowhere. This was not like a premeditated sale or something like that. This was literally, I woke up, I saw the stock down huge. I'm like, what's going on here? Looked into what's going on with the company, and I said, oh my gosh, like this is a disaster. This is a horrible move, in my personal opinion, for the long term of this company, and it's going to put them in a really bad position. And so I thought about it for about a half hour to an hour, and I said, I got to go ahead and cash out of this one and move those funds into other stocks that I think are much better positioned for the next few years than obviously this other stock. And that stock did me so tremendous for such a long time. It was a pillar in my dividend portfolio. So tough decision to make, but that's one of the sides of like being an individual stock picker, that sometimes you have to make these decisions. Something's going to happen, something's going to break that you never saw really coming, and I never saw this one coming. I'll be completely honest. I never in a million years saw an announcement like they made today. To all of a sudden hear that, I was like, what? Like, this is crazy. Like, I never anticipated this, and sometimes that's going to happen in the markets, and you got to make adjustments on the fly and make the best decision for your portfolio for the long term. So, hope you guys enjoyed today's video. As always, I appreciate you joining me. Thanks so much for being here, folks. Always, it's a sad day whenever I got to sell a stock, okay? So, in terms of what stock I sold here today and why I sold it, and then we'll get into the stocks I bought with that money. It is Tapestry, TPR. Really, really tough decision. This stock did so tremendous for such a long time. The stock performed tremendous for us, up $22,000 plus. That doesn't even include all the dividend money I made from Tapestry over the years. It's been a pillar of the of the dividend portfolio for several years, and to have to sell out of this one, it's a very, 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 very tough decision here today. But the news was so bad in regards to what's going on with Tapestry that I was like, I've got to pull the plug on this one. So what's going on here? Well, the first thing you got to understand is where Tapestry's at kind of cash levels wise, okay? So as of last quarter, they had about $651 million in cash. Now, for a company Tapestry size, that's a pretty good amount of money. That's not like a crazy sum of cash on the balance sheet, but that's a good chunk of change. And in terms of debt, they had about $1.6 billion of long-term debt. So for a company like Tapestry, very profitable business, good cash flow business, this is actually a pretty acceptable balance sheet. There's certainly many stocks I hold that have better balance sheets than this, but this is just fine. This is, I would grade it like a B grade type balance sheet that Tapestry had, maybe like a B minus, C plus type balance sheet that Tapestry had here. Everything was just fine and dandy. But things have changed, okay? So Tapestry just announced, which if you didn't know Tapestry, they own Coach, Kate Spade, and Stuart Weitzman, 3 very successful brands. They just announced that they're going to buy the Capri company, which was another public company, and those brands are Versace, Jimmy Choo, and Michael Kors. Now, I have no problem with those brands. I think those are very famous brands, and I think they're going to do just fine over time, right? So that might sound actually very exciting, right? Oh, man, they're buying out Versace and Jimmy Choo and Michael Kors. That sounds amazing, right? There's no such thing as a free lunch in this world, right? No such thing as a free lunch. Economics 101, right? They paid $57 a share to make this buyout happen, and it's an enterprise value of approximately $8.5 billion in regards to this decision, okay? The transaction is not subject to financing condition. Tapestry has secured $8 billion in fully committed bridge financing from Bank of America and Morgan Stanley senior funding. The purchase price of approximately $8.5 billion is expected to be funded by a combination of senior notes, term loans, and excess Tapestry cash, which we know Tapestry has some cash, but they don't have that much cash. You know what I mean? Like they don't even have $1 billion of cash, and there's an $8 billion plus deal, right? So that's going to be very, very small. A portion of which will be used to pay certain Capri existing outstanding debt. Now, let's go ahead and look at what Capri has going on balance sheet-wise, right? They had a very low amount of cash. I think it was less than $300 million at the end of last quarter. They have long-term debt on this company of about $1.8 billion in regards to Capri, right? So we're talking about Capri didn't have necessarily the best balance sheet in the world, right? They didn't have an awful balance sheet, but it certainly wasn't that great, right? And not only that, but the other issue is, like, this company's has some problems going on, okay? Versace revenues last quarter were down 13%, right? Jimmy Choo revenues were down over 3% last quarter. Michael Kors revenues were down about 11% last quarter. You could say, well, if a constant currency basis, maybe things might have been a little better. Sure. But at the end of the day, like, it's clearly they're having some issues with their brand. So basically, Tapestry is going to likely take over this company at some point in 2024. And they are going to have to fix the businesses, right? They're going to have to fix Versace. They're going to have to fix Michael Kors. And they're going to have to fix Jimmy Choo. They're going to have to get those businesses back to growth, right? While also, like, focusing on their businesses. That's going to be a messy situation. That's going to be a lot to deal with on a lot of fronts. Then trying to combine two big companies together like that and trying to figure out what employees to get rid of from the other company, it's going to be a process. We're not talking about this is just some easy, boom, it's all together tomorrow or something like that. This is a long process we're going to have to go through here, okay? A long process. But the worst part of all this is now they're going to be in a mountain of debt, an absolute mountain of debt for this company, right? And so I'm looking out and I'm like, do I really want to hold this Tapestry company that has done me tremendous over time when they're going to have to try to fix these brands, get these brands like Versace, Jimmy Choo, and Michael Kors back to growth, while simultaneously taking on insane levels of debt, which make the company far more risky to invest in now at this point in time, right? Never mind that, they're doing this in a time period where we're in a very scary time period to do a deal like this. Interest rates are extremely high right now. They're the highest they've pretty much been in 20 plus years. So if you're talking about doing a big debt deal, I mean, this is probably the most unattractive time to do it that I've seen, certainly in my financial life. I've been in the markets for 15 years. I've never seen a less attractive time to be making a big purchase like this. But not only that, you got to think about the cycle we're in right now of super low unemployment. What happens if the economy gets hit in 24 and 25? What does that mean for Tapestry's profitability? Well, I can tell you what happens when recessions happen, especially medium-sized recessions or large recessions. Guess what? Sales of everything go down, okay? It's not what it used to be, which means profitability goes down, which means when you're buying out a company like Capri, it could be actually far less profitable in a recessionary scenario. Same thing with a company like obviously Coach, right? So overall, I'm just totally in a disagreement for this deal. It's way too big to bite off for Tapestry. They're gonna be in loads of debt for probably decades to go in the future, because you got to understand, Tapestry also pays out big fatty dividends, right? And the yields I was getting on the shares I bought was ridiculous. And so they pay out these huge dividends. They just up their dividends again. So they're going to have so much cash flow going to those dividends. Meanwhile, you're going to have this mess of trying to combine these two companies together. And you're going to have all this debt to pay down over time. That's going to be at pretty high interest rates, I can tell you that. Pretty dang high interest rates. It's not an attractive situation. And so for me, I had to cut this one loose here today, and I did make the decision to sell out of my shares. And like I said, I never saw this one coming. If you would have told me 24 hours ago, I'd be selling my entire Tapestry position today. I'd be like, huh? Like what? That's probably not too realistic. They could have reported bad earnings and I wouldn't have made a move here. But this is a whole different situation. And clearly I'm not the only one that agrees with this, right? Clearly Wall Street and the markets agree with this as well, which is why that stock's selling off heavy right now. And I wouldn't be surprised if it continues to sell off when people start to add up the numbers here and what those debt payments will end up being and what that's going to eat into cash flow. Never mind if we have a recessionary scenario once again. Oh my gosh, because the cash flows decrease in that sort of scenario. So it's not good. No bueno. No bueno. So I had to make the decision, had to cut it loose here today. Did what I had to do, okay? Now, in terms of where did I put that money? I put that money in 6 different stocks. The first stock I put that in, by the way, I hope you guys enjoyed that kind of lesson there, because that's just the thought process of somebody who's been in this market for 15 years and been doing this for a long, long time. And, so I hope you get some good value out of that one. If you're a real long-term investor, you should have enjoyed that portion of the video, okay? Now, in terms of 6 stocks I bought here today, okay, the first one of these 6 stocks is Winning Resorts. Went ahead and bought some more shares of Wynn. Now, Wynn's already a position in the dividend portfolio, probably the 3rd or 4th biggest position, something like that. And I bought another 33 shares here today, paid about $104 in regards to Wynn. Now, do keep in mind when times are really, really good for Wynn, you can see the stock price go above 200, right? In terms of Wynn, their business is exploding in a great way right now. Okay, one of the hottest businesses in the world right now, literally. Operating revenues were $1.6 billion for the second quarter of 2023. That's an increase of almost $700 million from $908 million for the second quarter of 2022. Net income attributable to Wynn shareholders was $105 million in the second quarter of 2023 compared to a net loss of $130 million in the same quarter last year. Diluted net income came in at 84 cents a share in the second quarter compared to a diluted net loss of $1.14. I mean, these numbers are extraordinary. Our second quarter results reflect continued strength in North America and Macau, says Craig Billings, CEO of Wynn. In the U.S., Wynn Las Vegas and Encore Boston Harbor continue to perform well, generating a second quarter record adjusted property EBITDA at our combined North American properties. In Macau, basically Macau's coming back strong, and then they got a insane property they're building in the UAE right now, which is going to be a very exciting opportunity here over the long term. As far as our balance sheet goes, they got about $3.65 billion of cash on this balance sheet, compared to about $12 billion of long-term debt, right? And obviously they're in a position that if they want to continue to build up this cash balance to $4 billion plus over this next year, they could easily do that with the money this business is going to throw off over the next several quarters. That's cake. But a lot of it's going to depend on how much do they want to pay in dividends, how much do they want to, do for share buybacks and things like that. Not just that. GGR Asia, I've been using this website as a resource for years because if you don't know, I've been an on and off shareholder of Wynn Resorts for like a million years now at this point in time, right? And look at this. July Macau daily mass drop beat second quarter daily rate, says the Wynn CEO. Market-wide GGR, gross gaming revenue momentum in Macau, has been impressive, building through the second quarter, stated Mr. Billings. The strength has continued into the third quarter with mass drop per day in July exceeding what we experienced in each month in the second quarter and reaching 120% of daily mass drop in versus kind of 2019. So basically the Macau business is either at a place that it was prior to Rona, if not in some ways better than it was prior to Rona. That is huge, okay? Macau is officially back, baby. Macau is back, and that couldn't be better news for Wynn Resorts. Like, that's as good as it gets when Macau is back rolling again, because Macau is basically like shut down for like 3 years. It was ridiculous, okay? And the fact that Macau is now rolling again, and keep in mind the Chinese economy is actually not even in a great place right now. It's not like the Chinese economy is booming. If you look at some of the unemployment rates coming out from especially a lot of the youth and whatnot, they're not in a good place. So Macau putting up these sorts of numbers, imagine when China's economy does kind of get back on the right footing again and what those Macau numbers can be. Now, not only that, but we got to talk about what's going on in North America and what's going on in Vegas, because there's some big stuff going on in Vegas, okay? The F1 race is going to be in Vegas in the next few months. That's in November, right? And now this F1 race, I believe, is going to go on, as long as this one goes decent. It should go on every single year in Vegas, kind of moving forward now at this point in time, right? And this is absolutely massive. The publicity, obviously, this gets Vegas. The room rates are going to be some of the highest room rates you've probably ever seen in the history of the Wynn Las Vegas, which the Wynn Las Vegas was built in 2008. Encore was opened in 2009, right? And I don't think you're going to ever have seen room rates higher. You can't even, I bet you, if you try to look up and see if you can get a room at the Wynn or Encore for F1 race, I bet you any money it's already probably booked out. You probably can't even get a room there. And the rates they probably are getting for that is going to be ridiculous. The casino drop is going to be disgusting for F1 weekend. You have like the amount of money that follows F1. This is like the ultimate sport for a company like Wynn Resorts, because a lot of their clientele and customer base loves F1, okay? A lot of money there. So that's phenomenal news. Also in Vegas, in a few months, is the Super Bowl. February 2024, we got the Super Bowl here, which is, the granddaddy of them all. So we're talking about the Vegas numbers over the next several quarters are going to be phenomenal, okay? So you got Macau rolling again. You got Vegas that's going to be putting up the best numbers we've ever seen in history over the next several quarters. And that makes for a very, very exciting time here for quite a while, right? Now, in regards to Wynn, they obviously just started paying dividends again very recently, now that they got their business on the right footing again. But keep in mind, these dividends I'm getting today are very small numbers compared to what these dividends should be in future years, okay? This used to be a company back in the day that would pay 75 cents per share you owned, sometimes $1 plus per share you owned of Wynn Resorts. So when I look at a stock like Wynn, I'm like, they're going back here over time. There will be a day again when they're paying out 75 cents a share, $1 a share in dividends. And so I'm able to buy these shares at very cheap prices now, and will prosper over future years, right? And this is one of those stocks that even in a recessionary scenario, I can buy the dip in. Because their cash balance is so big and they're so well financed with a lot of cheap debt that they financed many, many years ago, obviously when debt was a lot cheaper. This is a situation in regards to Wynn Resorts that I can buy the dip. It doesn't matter. A recession comes, this happens, that happens. It doesn't matter. I can buy Wynn. It's one of those I can sleep well at night holding a stock like Wynn Resorts. Okay, that's first stock up here. Second stock of these 6 stocks I bought here, of these dividend stocks, is Foot Locker. FL, okay? About 145 shares here today, paid $25 and some change for those. That was a little less than a $4,000 move there, right? In terms of Foot Locker, pretty easy buy for me. Obviously, they're restructuring some of the business right now. It's a 6% plus dividend yield on this baby, which is absolutely massive. I mean, just an insane dividend yield on this one. Mary Dillon leads the company, obviously. Now at this point in time, right, she just took over the company a few quarters ago. She came over from CEO of Ulta Beauty, and prior to that, she has a lot of great experience. So with her restructuring there, I think this one's going to be looking very, very good. I get to collect massive dividend money, and I think I'm going to get very nice share appreciation over the next few years as Mary Dillon works her magic in Foot Locker. So yeah, very, very excited about Foot Locker and the trajectory that business will be on over the next several years, okay? And balance sheet, pretty good position when it comes to Foot Locker, okay? Next stock up here, third stock of these 6 stocks, the dividend stocks that I bought here today, it's Texas Roadhouse. This was probably the smallest buy for me. I bought about $2,500 worth. Bought 23 shares of Texas Roadhouse here today, the restaurant chain. If you don't know Texas Roadhouse, you're missing out in life. That's all I'm going to say to you, okay? So in terms of Texas Roadhouse, they report their most recent quarter. This was probably a week ago, 2 weeks ago now at this point in time. Revenues were up over 14%. Income from operations was up over 11%. Net income was up about 13.6%, and diluted EPS was up 14.7% year over year for Texas Roadhouse. Extraordinary numbers, right? One of the great things about Texas Roadhouse, this is one of those stocks I just like, please go down, please go down, please go down, because I'm just like, I just want to buy. This is one of those stocks I would love to buy as many shares as I possibly can get my hands on. There's no debt on this balance sheet. A restaurant chain with no debt. How about that? How about that? Okay, a restaurant chain with no debt. How beautiful is that? I mean, seriously. Like, how beautiful is it to know that it don't matter if there was a recession, doesn't matter what's going on. The company has no debt on the balance sheet. They're in a great position, great cash balance. They usually always, pretty much have $100 million plus of cash sitting around with no debt. Like, it's almost unheard of, man. Absolutely insane. So this is just an easy, I hope it goes down because I would love to just buy as many shares as possible of this stock, right? Dividend yield on this one, a little less than 2%. The only negative you could really say about Texas Roadhouse, the only negative is valuation. It trades a little rich, especially if you compare it against another stock that I love, which is like Cheesecake Factory or a few other restaurant chains. But when it comes to Texas Roadhouse, the thing that's beautiful about Texas Roadhouse is because they're so attractively priced, you can, almost everything at Texas Roadhouse is less than $20, and you get sides and everything with that, right? And many of their meals are less than $15. Because it's so affordable for being a restaurant chain, right? I mean, it just seems like it does well in almost any economic environment. And not only that, they have no debt. So you're taking such little risk in this one. And so that's why it trades much richer than I think the average restaurant stock out there. We can put it that way, right? So I just love Texas Roadhouse. Phenomenal. That's somewhere that I always enjoyed going, in high school with my parents. We'd go there in middle school. And then, even nowadays, I still take my kids to Texas Roadhouse at least maybe once a month or so. Just a great restaurant operator. They run their business as good as anybody runs their business, okay? Fourth of these 6 dividend stocks I bought here today is Cheesecake Factory. This was a big buy for me today. It wasn't the biggest buy, but it was a big buy. $7,400 worth, about 209 shares of Cheesecake Factory at $35.82 in regards to this one. Cake, sitting at a dividend yield of about 3%. The numbers are really, really good at a cake. this for me is just another one of those easy buys. It doesn't have as good of a balance sheet as Texas Roadhouse, so that's the one knock on them. But it also trades very, very cheap. I mean, extremely cheap. If you look at the forward P of Cake versus Texas Roadhouse, I mean, we're talking about, almost half of what I'm paying for Cake versus Texas Roadhouse. So I own a company here with a higher debt load, obviously, than Texas Roadhouse, which has no debt, right? But I get a very, very profitable business with a very low forward P and a very good dividend yield. And I will say it's more diversified than Texas Roadhouse. You buy Texas Roadhouse stock, you're really only getting the Texas Roadhouse chain. Bubba's is something they're building out, Bubba's 33, but that's still early days when it comes to Bubba's. And so that's a long-term exciting opportunity over this next 10 years. But, if something was to happen to the Texas Roadhouse chain, some sort of bad publicity or something like that could certainly hurt them. But when it comes to Cheesecake Factory, it's not just Cheesecake Factory I'm getting North Italia, which is much further along as a number 2 for Cheesecake Factory versus what Texas Roadhouse has with Bubba's. And then I'm also getting simultaneously Flower Child, which is a pretty exciting long-term opportunity for the company. And I'm getting overall FRC, which is a restaurant concept where they'll build these different restaurants. And if you live in Arizona, you can go to a lot of these FRC concepts. When I was in Arizona earlier this year for quite some time, I went to a ton of these different concepts, almost every single one, and experienced them. And they're all really freaking good. They're all really, really good. And so they're just one of those companies that's going to be able to build out these other very successful restaurant chains over time. And so Cake, really love Cake. It's an easy buy for me. Yes, number 5 of 6 stocks up here of these dividend stocks I bought here today. This is a brand new stock, okay? It is Nike. NKE Nike, okay? I bought 50 shares as a starter position here. $5,400, first time I ever owned Nike in my life. Man, just an easy stock for me to buy the dip on if it ever dips in the future. Certain stocks that I'm like, man, if it dips, am I going to, buy it? This is not one of those stocks. This is an easy buy the dip candidate if it ever happens, okay? It's not a big dividend yield. That's the one knock on Nike. It's only a 1% something yield in regards to this one, but it's just such an easy stock to own. It really is. I've worn Nike my whole life. It's just they put up their numbers, they do their thing. Phenomenal company, best of breed. And then the big buy here today was Target. Target bought 95 shares. That was a $12,500 move in regards to Target here today. Another easy buy for me. 3.3% dividend yield on this one. I can buy the dip on Target all day long. Doesn't matter. The stock goes down at 120, 110, 100. That's an easy buy the dip. I'm going to sleep well at night holding Target stock. No worries there, okay? Appreciate everybody joining me as always. Those are the dividend stocks I bought here today, and that's the decision I went ahead and made. Hope you guys got a lot of value out of today's video. I appreciate you joining me. Also, make sure you check out pinned comment down there for my free workshop that I put together last week for you guys. How I find 10x stocks. It's about a 30-minute video. You get a lot of value out of that one. Much love and have a great day.